Hey everyone, Dan here. We are just before market close on Thursday, July 1st. We're going to do our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you'd like to be connected outside of YouTube for a once or twice a week email that I'll send out with trade ideas, follow up on videos, things of that nature, throw your email into the Google form, which is linked in the description below. Once I get to 100 folks signed up and, ready and willing to participate with this newsletter, then I'll start conceptualizing launching it. So it's going to be a month or 2 months out into the future still. So nothing imminent, and it won't be oppressive. It'll just be, like I said, once or twice a week. But hopefully it'll supplement some things that I would like to be able to put out, but I just don't have time to make videos on. And so I can stick them into a newsletter and share them out that way. So find that in the description below. Also, if you do find these videos helpful or interesting, feel free to share them. That actually helps a ton. Reddit, Twitter, Facebook, wherever else you share stock stuff, I would really, really appreciate it. Okay, SoFi having a bit of a rough go today so far. So falling through this 1872 support zone that we had charted, and trying to sort of like treat it as resistance, which is a good sign because you want it, if it falls through, to start bouncing as resistance to try to regain support. But needing to test close to that 1807 level at its low there, low of 1816 today, so within 9 cents. So it's having a bit of a rough go. We can talk about why I think a bunch of this is in a minute. But one thing to note here, the volume has fallen off quite significantly from the last probably week or week and a half. And so I think that's, allowing for just kind of some natural selling off to happen and pushing the price down more than it otherwise would if there was higher volume. But then also some potential things going on behind the scenes that we'll talk about when we get there. Oops. All right, so let's expand this out a little bit. So basically what I'm going to be looking for is for it to, not dip below this 1807, of course. So there's a green candle that's sort of like evolving at the moment. We can zoom in a little bit here to get a slightly better view on the 5-minute side of things. So the thing that I want to watch very closely right now is, and we've seen SoFi do this in the past, unfortunately, but this like repetitive topping out and then additional selling off happening. So it's like I said, it's almost the end of the day, but it's sort of like an important point given the way that the day has gone, so that it doesn't triple top out here and head back down, because I don't know if it'll be able to catch itself at this like 1835, 1830 level again if it gets pushed down there. There might not be the buying pressure that there has been late in the day today at that level. So if it can just, not top out at this point, it'll do itself a bunch of favors by not having to see if there's buying pressure down here still, even though that's been sort of having to happen for the last several hours. So that's what I'll be looking for in the near term. And, I think if we take a look at a few of the indicators, it said that it came within 9 cents of the low, and when it did that, when it stretched down here to 1816, it was here at 1816, the ATR was at 11 cents. So 11 cents above 1807 is 1818. So it dipped into that price bounce zone, that support zone, for all intents and purposes, and then was able to recover. So chart's still holding up intact pretty well. We're getting some pushback here again at this topping out level. So I'm really hoping, I don't know what's going to happen if it comes down here and needs to try to hope that there's still buying pressure here again. But, we'll see. It's sort of between, this is the rock and this is the hard place. So let's see what it does here at the end of the day. On the RSI side of things, mid-range, from this basic like consolidation here, obviously it sold off earlier today and dipped briefly into oversold territory. Looks like 3 times throughout the day today. bounced back out of it relatively quickly, but then couldn't get any motion even above the midline. At some points, not even close to the midline. And so, that obviously is indicative of like a bearish sentiment at the moment, which is obviously shown by the MACD. I mean, it looks nice to have this run up, but you have to realize you're coming from so far below the baseline that this is just a run up just to get it back to the baseline. So there's still a ton of room for it to run up if the buying pressure can come in, but it needs volume to come in because the volume overall is so low that any amount of cells is just sort of like overloading the lower volume. Again, it's weird because it's much higher than its 3-month average, but it's just much lower than we've seen over the last 5 to 8 trading days, something like that. The MAs, yep, fully in a bearish formation here, so we've totally flipped over from where we were like around this period here. We were trying to make a run up yesterday, and definitely getting pushed down at the moment. Now, if you remember last night's video, I talked about the fails to deliver that were going to be coming to pass in up until July 13th. So let's take a look really quickly. So there were a bunch of fails to deliver that needed to be reconciled ahead of today, July 1st. And so I think that that's a bunch of this consumption here, was a portion of that. Again, not all of it, because in total there's only 6 million fails to deliver for the first half of June, which are coming to that 30-day window now, periodically, so that they don't get into aged fails. I'll link this in the description below as well. I'll link this video in case you have no idea what I'm talking about, but it's in last night's video. But basically, buying pressure coming in as potential shorts needed to purchase shares in the open market in order to deliver shares that they had already sold to somebody about a month prior. Now, what I would be looking for, since the 13th isn't until here, there's several trading days left in this window where some buying pressure could come in. So what I had said last night is I think we'll see these sort of fluctuations where we get these kind of inexplicable run-ups that seemingly come out of nowhere, especially if they come late in the day. To me, that's pretty indicative of buying pressure coming in large quantities, which would sort of like fit the criteria for institutions, hedge funds needing to accumulate large number of shares in order to deliver them so that they don't start incurring additional fines and fees and penalties. And then, we would see then manipulation coming in to suppress the price of the stock, aka short selling, that sort of thing, and pushing it down so that they could get into deal range again, which you see this is where they picked up the deal range before, was its same zone, 1807 area, and sort of like load up on their next batch of buys so that they can deliver them ahead of the dates rolling into the 13th of July. So that's what I would look for, a suppression, buying it up in order to have shares to deliver. Suppression, buying it up in order to have shares to deliver. And I would expect to see that through probably around, I don't even know what days of the week these are. So a week from today, which is a Thursday, is the 8th. Yeah, I would expect these to sort themselves out by like late next week, maybe the following Monday. But they need time for those transactions to settle as well. So they need to give themselves a buffer of a few days. Plus, if it feels like it's in good deal territory to them and they've already made money by shorting the stock down from the high that they helped create, then there's probably enough incentive there to go ahead and just close out that transaction, deliver those shares, and move on. So let's take a look at the data where we stand right now. So last night reported that the short volume ratio, still close to 20, but still, relatively speaking, as it pertains to SoFi and certainly IPOE before that, shorts relatively staying away. Now they are coming back a bit from, this teens ratio that they had gotten into. And again, I think that was on 628. So that was, the same time at which I believe a lot of this purchasing was going on after a bunch of suppression. You see that bunch of suppression in the days leading up. Huge short volume ratio here, 45.16, and high 20s in days prior to that, which is a very, very high ratio. So a bunch of suppression and then buying up in order to have shares to deliver, and then suppressing it once again. Now, they haven't come in heavy yet. Maybe that's because they don't feel that they have to come in heavy. Maybe that's because they haven't yet started the short campaign in order to drive the price down to buy up more shares to deliver. But that's what I'm going to continue to look for ahead of the 13th of July, and we'll get to that data in a second to do a quick recap on it. Today, we saw about 1 million shares coming out of just one broker-dealer, Interactive Brokers, coming out first thing this morning in order to sell shorts, and then some opening and closing going on. Ultimately, it appears to be more closing than opening. We're set right now to close with more available shares tonight than there were last night. Fee continued to go down, but fee is still playing a role because it is still relatively high. Now it's not in the hundreds or 200s like we've seen before, but that's an extreme case. 44.9% is still a high borrow fee, especially if you're not getting the sort of traction or the momentum in the direction that you need it to be going. For short selling, that would be down. So if you have the trade going against you and you're paying a high fee, at some point it's not going to be worth it. So it's interesting that they're sort of staying away at the moment. I'm not 100% sure why. There is certainly the possibility that whatever shares were accumulated here actually were as many as were needed for any of those naked shorts to deliver on the shares through the July 13th deadline, in quotes. That's possible, kind of no way to know, but that's certainly always a possibility as well. Now, here's that data that I'm talking about. This is from the first half of June. You see June 1st through June 13th. This is from the SEC. This is on the SEC website. You see over 1 million failed to deliver on May 31st. Those came to age on those came to age today. And so basically those were what I assume were being accumulated in the days leading up to today so that they could be delivered out ahead of time. Transaction settled and delivered out. Now, the ones that I'm waiting for, see, these are all below 1 million, which, they still cumulatively mean something. These all add up to a little over 6 million. We went over that in last night's video. But this is the next big bump. June 13th, which comes to age 30 days from this date, which is July 13th, which is, like I keep saying, the next date that I'm looking for. So I'm looking for a potential another run-up that would happen, looking for a few days. This happened about, 3 days before they needed to be delivered. So, if July 10th is a trading day, I don't know off the top of my head. I think that might be a Saturday. So if so, then maybe the 9th is a potential date for it to run up. And that would give them enough time for the transaction to settle, be sure that they had the shares, and then they could deliver them. And so we might see some additional shorts coming in pretty strong to try to drive this price down. But again, if that was a big part of what was going on here, they were happy to take those shares on at 1807 previously. So that might be the case again. So there might not be a bunch of incentive to come in and try to short it down, beyond, much beyond where it is. So maybe not even a bunch of incentive to come in right now and try to short it down. But that's what I would be keeping an eye on. The other thing is this Friday, so tomorrow, Max Payne is still being reported as $20. So if the share price can be pegged as close as possible to $20 tomorrow, which would mean it would have a big day tomorrow, that's quite a nice, that would be quite a nice percentage gain. That's when the most options, puts and calls, would expire out of the money, completely worthless, and therefore to the benefits of a bunch of market makers and folks who collected the premium to underwrite those options. Now, Max Payne is a theory, of course. If this was a 100% thing, then certainly it like would be obfuscated and wouldn't be so well known. So it's just a theory that could play a role sometimes in how market makers are trying to move the price of the stock for that gain. Now, if that were to happen, we've seen this increasing every single day since we started reporting on it. Open interest nearly 20,000 now. So this would mean 20,000 contracts plus all of these above it that are also in the money. So thousands and thousands and thousands of contracts, which each represent 100 shares of SoFi, would be in the money. Now, a bunch of those are probably already accounted for, meaning whoever sold that option already has 100 shares per contract that is able to be delivered to the person who exercises the contract once it expires in the money. But to the extent to which a percentage to a larger or small degree were underwritten without SoFi stock already being in hand, aka a covered call, so this would be a naked call, to the extent to which those shares would need to be bought in order to be delivered, that could start to set off a gamma squeeze of sorts. It wouldn't really start to set, it would be a contributing factor to something that could then start to set off additional triggers for a gamma squeeze. So I'm strongly looking at that possibility to the extent to which Max Payne can be realized, $20 tomorrow. Not only would that be a big Friday, but that would also set us up really strongly with some really interesting prospects for the coming days and weeks, more so weeks, if a gamma squeeze could be set off because of all of the buying that may have to happen in order for those options contracts to be delivered on. So those are the two things I'm looking at: the fails to deliver volume potentially coming in to purchase those to be able to deliver them, and then the $20 closeout tomorrow. If we can close over $20, that could set things off. Now, it's a lot to ask for tomorrow, but who knows? Maybe if there's incentive for market makers to both hit the Max Payne number and buy up a bunch of these cheaper shares now that it's down close to the low 18s, to have shares to deliver on any of their fails to deliver, maybe that's a good combo factor in order to buy them up, to have shares to deliver, but then also to push the price to Max Payne through all of that buying pressure, and sort of like be done, sort of like kill two birds with one stone in that way. All right, well, it'll be an interesting few days ahead. If these things don't play out, then we'll still keep trucking ahead. It's a lot of factors to keep up with, and the big unknown is like how many of these are naked calls that have been sold, and how many of these fails to deliver were legitimate and have already been delivered, and how many that were not so legitimate have already been purchased to be delivered in this period of time. So a bunch of unknowns, so it's highly speculative, so just keep that in mind, but it's an interesting time and it's interesting data regardless. All right, well, I hope your trading day went well, and I hope that you're ready for an exciting Friday, and I will see you in the next video.